Hello and welcome to The Teaching Trader. In this series of videos we will be showing you what we consider to be the best TradingView indicator. Lux Algo, the all-in-one premium toolkit for traders. These videos are essential for all traders wanting to take their trading to the next level, as we will be covering products and features not available anywhere else. Make sure you keep an eye out throughout this video for our Teaching Trader top tips, and watch to the end where we show an extra special bonus feature. So what exactly is Lux Algo? Well, the best thing about Lux Algo is that it isn't just one indicator, but a complete package of next generation trading tools, along with buy and sell signals, alerts, optimizer bots, and everything any trader could need. In this, our first video of the series, we will show you Lux Algo Premium, including the different signal modes and indicators and how they can be used to improve your trading success. If you're an experienced user or new to Lux Algo, this video will help you to fully understand all the features available within the package. First, let's look at signal modes. Lux Algo features buy and sell signals which aim to assist your trade analysis. From the settings within Lux Algo, you can select which type of signal you prefer. There are two main signal styles. You can select confirmation signals or contrarian signals, depending on your trading style. Here we can see a buy signal, where you may choose to enter a buy or long position at the close of this candle. You would stay in this trade until you reached an exit signal, identified here by this coloured cross, or this sell signal. Exit signals don't always appear, but when they do, they aim to identify the highest possible price. Here, you can see you would have closed this trade in profit. In this example, we initially got a buy signal, followed by an exit signal. However, the price continued to go even higher, where there was a second exit signal further along. There can be more than one exit signal. For this reason, you may want to take partial profits at each exit signal, instead of closing the trade fully at the first one. Remember, if an exit signal appears, they always follow a confirmation signal with a win. If you are taking profit at each exit signal, you would want to close your trade fully when the sell signal appears. Now, let's look at this live example. Price has been trending downwards until this buy signal appears and price turns to the upside. On the buy signal, you may choose to enter a long position and remain in this trade until the exit signal appears. Once we have an exit signal, you can choose to either fully exit the trade or take partial profits. But remember, if you choose not to fully close your position at the exit signal, you would want to close it by the next sell signal, as this indicates price is about to turn to the downside once again. In addition to normal buy and sell signals, there are also strong buy and strong sell signals. These strong signals typically work with the current trend and can give you extra confidence the trade will go in your favour. Make sure to comment below and tell us what features you would like to see in the next video. as we always read the comments to decide what to focus on next. Contrarian signals are a little more advanced than confirmation signals. This is because they look to go against the trend, trying to catch the tops and bottoms of price by using extremely fast decision timing. Just like confirmation signals, contrarian signals also come with normal buy and normal sell signals. Should price be excessively overbought or oversold, strong signals can also be displayed. An exit signal gives an early indication to take profit and would confirm the trade as a win. Lux Algo has the option to display your candles with this easy to follow colour-coded visual guide. The easiest way to look at it is, if the candles are purple, whether they are after a buy signal or a sell signal, then the price is ranging sideways and the trend is unconfirmed. Once the candles turn red or green, then the trend in the corresponding direction is confirmed. Green for an upward trend and red for a downward trend. We view the buy and sell signals as an indication of trend direction, rather than using the signals on their own to enter trades. Although all signal modes within Lux Algo are extremely powerful, we advise that you use them in confluence with other tools and indicators within the Lux Algo package, in order to increase your chance of trade success further. Adding an indicator to your chart is as easy as going into the settings and selecting which indicator you would like to add. Let's first look at the NeoCloud. This is one of the most recent additions to the Lux Algo package. Once added to your chart, we use the NeoCloud to determine the current trend direction. When the price is above the NeoCloud, the trend is up. When price is below the NeoCloud, then the trend is down. When price is inside the NeoCloud, we treat this as trendless or transitioning between trends. We would advise that you take care during this time, even recommending that you wait for price to pass through fully to one side and confirm trend direction before entering a trade. This is because we advise our members to take trades in the same direction as the trend. Using the NeoCloud is a fast and instant way to visualize this. Without the NeoCloud, looking at the chart you may struggle to instantly see which way price is trending. Is it bullish or bearish? As soon as the cloud is added, it's clear and obvious. Price is above, therefore it is bullish. Price is below, it must be bearish. Or price is transitioning, in which case we wait to see which way it will confirm. The cloud is filled with a gradient colour, showing how new a detected trend is. The brighter the colour, the older and more established the trend. You can also use the NeoCloud as a support and resistance tool, depending on where price is in relation to the cloud. When price is in an uptrend, the NeoCloud can offer support. When in a downtrend, the NeoCloud acts as resistance. Once enabled, an upper red zone and a lower green zone is displayed on the chart. We use reversal zones to show when price is too high or too low and likely to move back into the centre. So if price is in the red zone, it is considered to be overbought relative to recent price, and will likely level out or even pull back into the centre zone. If price drops into the green zone, it is considered to be oversold relative to recent price, and will likely level out or increase back into the centre zone. When price movement stays within the middle zone, price is considered to be trading within its current average. This indicator is best used for a sideways or ranging market, as it helps the user identify the top and bottom of the range. Reversal zones are also a fantastic indicator for those wanting to trade reversals, combined with your preferred choice of signal for a more powerful reversal strategy. An example here, price is in the oversold reversal zone, so we are expecting price will level out or increase, but we don't know when. Combined with confirmation signals, and here we get a strong buy signal, confirming the trend change, and price moves up. The trend tracer is a trend following indicator and shows the current trend by displaying a green line for an uptrend and displays a red line for a downtrend. When price is above the trend tracer, this can be used as another indication that price is in an uptrend. When price is below the trend tracer, this can be used as another indication price is in a downtrend. The trend tracer aids the trader by assessing the trend, but we use it in many other ways as well. We find that the trend tracer is also useful as a pullback tool and can be used similar to a moving take profit. The trend tracer is useful as a pullback tool as you can use it to show whether price is currently in a retracement or reversal. Here, price pulls back to the trend tracer to signify price is in a retracement. What we don't yet know is whether price is going to continue to the upside following the current trend, or if price is going to reverse completely and start a new downtrend. Using the trend tracer, we don't consider price to be in a reversal until it crosses through the trend tracer and there is a colour change. If price merely bounces off it and continues in the direction it was already going, then we know it was just a healthy retracement and we can expect more upside. But once price passes through with a candle close, you know that's it. The current trend is over and a new trend is likely to begin. So in this regard, you could use the trend tracer as a moving take profit, saying, I'm going to stay in the trade until price passes through the trend tracer. If price just keeps bouncing off the trend tracer, I'm fine with that, but once it crosses through and this signifies a trend change or reversal, then this says to me it's time to get out of the trade with the profits I've already made. The trend catcher is similar to the trend tracer, in that it also turns green in an uptrend and red in a downtrend. However, the trend catcher is more predictive, aiming to detect the trend change very early on. The trend catcher is more reactive. We like to use the trend catcher as an early warning system that price could change. The trend catcher is excellent at catching the tops and bottoms of price. It can be safer to exit the trend when the trend catcher changes colour, knowing that you can always re-enter the trade again at a later time having already taken profit. We also like to combine the trend tracer and the trend catcher together on the same chart. In order to differentiate between the two lines, there is a colour difference between the two. We also like to increase the thickness of the lines, so it's easier to see them. To do this, go into Style Settings, scroll down to Trend Tracer and change the size by making the line thicker. You can change the colour or style of all of the indicators in this way as well. Using the Trend Catcher and Trend Tracer together, you could choose to enter a trade under safer conditions, only entering when both are the same colour, both being green for a long trade or both being red for a short trade. Waiting for both to be the same colour before entering a trade helps to avoid fake-outs or false signals. You can also develop a crossover strategy when using both the trend tracer and trend catcher together. Similar to a moving average crossover strategy, you can use the trend catcher as the fast or short-term moving average and the trend tracer as the slow or long-term moving average. The advantage of this strategy is that it is easy to follow. This strategy gives very clear entry and exit signals, telling you when to get into and get out of the trade. When the trend catcher crosses the trend tracer, enter the trade. When the trend catcher crosses the trend tracer again, exit the trade. It couldn't be simpler. This strategy works best in a trending market. That's why the trend catcher and trend tracer are some of our favourite indicators within the Lux Algo package, because they have so many uses. They are useful to determine whether price is trending. If price is trending, they will tell you in which direction. You can also use them as a complete trading strategy with entry and exit signals. They also show you when a trend is just retracing or when a trend is ending or likely to reverse, so can also be used as a take profit or stop loss. Another new indicator for the Lux Algo package is the hypertrend. The hypertrend indicator estimates underlying trends in the price in a linear fashion, all in real time, so you can determine whether the price is in an uptrend or downtrend. The coloured area around the hypertrend line is an additional support and resistance area which is also displayed. A line sloping upwards would indicate that the hypertrend is detecting an uptrend, while a line sloping downwards would indicate the hypertrend is detecting a downtrend. Our preferred method of using the hypertrend is as a tool to assist you to trade in the trend direction. We advise to only take a trade in the same direction as the hypertrend. For example, if the hypertrend is detecting an uptrend, then we would only enter a long trade, whilst price is above the hypertrend line. Going with the hypertrend, we would monitor while price stays above the line. We can expect that at some point price will cross below the hypertrend line, as after all, trends don't go on forever. And when price does cross below, we can view this as an early warning that price may reverse in the opposite direction. Depending on your own adversity to risk, you may want to close your trade when price passes through the hypertrend line into the lower support area. Or you may want to close your trade when price completely passes through, creating a new downward trending hypertrend. If you're a trend trader and enjoy trading with the trend, then the hypertrend indicator would be a fantastic tool to add to your trading toolbox. The first thing to note about the new Lux Profile is that it is comprised of two indicators in one. There is a weighted volume profile on the left, and on the right it shows the accumulated weighted volume within price intervals. The area on the right indicates the degree of variations of the price within their respective intervals. A dashed line highlights the price level with the highest degree of variation. A point of control, solid line, indicating the price level with the most accumulated weighted volume. Lux Profile is an indicator inspired by the classic volume profile and is calculated from the most recent 100 bars using 100 price intervals. Now that can all sound very complicated for a new trader. To simplify and explain how it can be useful to you, the indicator shows where the most volume is within a certain price and range. The point of control is the price level with the highest traded volume for the past 100 bars. This is where the most trading has been done, where the greatest number of transactions took place, which makes it a very important level. The point of control can be used as a potential support or resistance level. This is useful to you as it shows at what price most other traders are trading at, giving an indication where you may hit support or resistance within your own trade. The Lux Profile is best used with range trading. It can show you the low area of the range and the high area of the range. When range trading, you would want to take an entry around the bottom of the range for a long trade, or an entry around the top of the range for a short trade. It is advisable to avoid trading in the middle area, usually the immediate area around the point of control. The NeoCloud is another indicator to assist the trend trader. When enabled, a cloud type indicator will be displayed on your chart. We use the NeoCloud to show trend direction as well as showing support and resistance levels. The cloud colour highlights the current detected trend by the cloud, with a blue colour indicating an uptrend and a red colour indicating a downtrend. Here you can see price is in a downtrend, staying below the NeoCloud. Price tries to break to the upside, but this is just a fake out, not a breakout, as identified by the NeoCloud. The breakout isn't confirmed until price fully passes through the NeoCloud, as we can see here. When looking for a trend change or trend reversal, we like to use the NeoCloud as it shows when price changes direction. We also like to use previous highs or lows of the NeoCloud to identify where previous support or resistance has been, this giving an indication where we may face support and resistance again in the future. As promised at the start of this video, we always like to leave you with a little extra, an additional bonus feature we think you will benefit from using in your trading analysis. The Take Profit and Stop Loss feature shows 4 take profits and stop loss levels on your chart. These levels aim to help you set stop losses and take profits by estimating points of potential support and resistance. Take profit and stop loss levels work with both confirmation or contrarian signals. Take profit targets are displayed above the price, while stop loss targets are displayed below the price. If the price was to significantly deviate from the highest take profit, the target points will also adjust to reflect this, making them fluid, should the trade go even better than expected. So, in this video, we have looked at the features of the Lux Algo signals and indicators. But what's the benefit to you in using the complete set of trading tools? Well, the advantages of using all the tools available to you in the Lux Algo package is that it gives you precise entry and exit points, take profit points, and stop loss points, ultimately giving you the edge, so you're able to make decisions with confidence that your analysis is more likely to go the way you want it to. Now, we have gone through a lot of information here, and it can be a lot to take in first time. Feel free to watch the video again to ensure you are comfortable with all the features described so far before moving on to the next video. Also, as these are only some of the features of Lux Algo, as we cannot cover the full package in just one video. If you would like to see more about Lux Algo, please tell us by commenting below. Coming up in our next videos, we would like to explore the Lux Algo package with you even further, as we are yet to talk about the Lux Algo dashboard, Lux Algo premium oscillators, and the Lux Algo support, resistance and patterns indicators, including automated trend lines. We would also like to show you how to set alerts for the buy and sell signals within Lux Algo, and even how to automate your trading with optimizer bots. Let us know if any of these features would be of interest to you. If you would like to try Lux Algo for yourself, make sure you use our link below. Also, click the like button, subscribe, and turn on the notification bell so you are notified exactly when we release new content. And we will see you in the next video.